Damn good morning, crypto fam. Welcome back to the Crypto Dam, where we break down everything moving the markets today. I'm your host, and we've got a packed show for you. We're diving into XRP's massive ETF inflow streak, the SECs, brand new crypto custody guidelines, Solana ETF momentum, and what's really holding Bitcoin back from its next leg up. At the end, I'll reveal 3 coins with serious potential based on today's news. Let's get into it. Before we jump into the main stories, here's a quick hint for you. One of the coins I'm analyzing today has a direct connection to regulatory developments we'll be covering. Another one ties into the stablecoin narrative that's gaining serious traction. Keep watching to find out which ones made my list. Let's start with XRP because the bulls are absolutely taking over. XRP exchange-traded funds just recorded their 19th consecutive day of positive inflows. We're talking over $20 million flowing in on Friday alone. 19 days straight. That's not a coincidence. That's institutional momentum building. Social media sentiment has completely flipped too, with bulls gaining ground over bears across major platforms. This sustained inflow pattern tells us something important about long-term confidence in XRP, especially with regulatory clarity improving. Now let's talk about something happening on the ground level in real economies. Venezuela's stablecoin usage continues to explode amid ongoing economic instability. According to TRM Labs, the crypto ecosystem there is a direct product of economic collapse and international sanctions. When traditional currency fails, people don't just sit around. They adapt. And they're adapting with stablecoins. This isn't speculation. This is survival economics driving real adoption. Remember this. It's crucial for the analysis coming up later. Speaking of regulatory developments, we've got major news from the SEC. The Securities and Exchange Commission just published a comprehensive crypto custody guide. This is actually a good faith primer covering custody basics, best practices, different forms of wallet storage, and common risks. Why does this matter? Because institutional players need clear guidelines before they can fully commit capital. This kind of regulatory clarity removes barriers. It makes the space more accessible to traditional finance players who've been sitting on the sidelines. This connects to one of my coin picks, so keep this in mind. Let's shift to Solana because something interesting is happening here. Solana ETFs just recorded a 7-day inflow streak, and this is happening despite a price slump. Think about that. Price is down, but institutional money keeps flowing in. The first Sol ETF launched back in July, then Bitwise came in with their Sol ETF in October, which pulled $57 million in first-day trading volume. When smart money buys the dip, you pay attention. Now here's what's holding Bitcoin back, and this might surprise you. According to analyst reports, Bitcoin OGs selling covered calls are the main culprit suppressing price action right now. Despite traditional ETF investors willing to pay premiums to go long, Bitcoin natives are selling covered calls and putting a damper on any potential rally. It's a classic case of old money taking profits while new money tries to push higher. This creates sideways action, and that's exactly what we're seeing. All right, coming up next, my 3-coin analysis based on everything we just covered. This is where I connect the dots for you. Based on today's news market data, here are 3 coins I'm watching closely. This is my personal analysis, not financial advice. First, stable. I'm analyzing this one because of the Venezuela stablecoin adoption story we discussed earlier. The data shows stablecoin usage expanding in economically unstable regions, and stable sits right in that narrative. Current price is around 1.5 cents with over 6 million in 24-hour volume. Now, it's down about 7% today. But from my perspective, the long-term trend for stablecoin infrastructure is undeniably bullish. When entire countries turn to stablecoins for daily transactions, the underlying infrastructure tokens gain utility. This is what I'm watching. Real-world adoption drives value over time. Second, Core. This one caught my attention because of the SEC custody guidelines that just dropped. Core is an infrastructure play, and the data suggests it's responding to increased regulatory clarity. Price is at 15.5 cents, up nearly 29% in 24 hours, with over 2.5 million in volume. My personal take is this. When regulators publish clear custody standards, infrastructure projects that facilitate compliant custody solutions become more valuable. The market is already pricing this in with that 29% jump. Based on the data, institutional interest in proper custody infrastructure is accelerating, and Core positions itself in that exact lane. Third, Banker Coin. I find this interesting because it could benefit from the broader regulatory clarity trend we're seeing from the EC. Price sits at about 0.02 of a cent, up 11% with over 2 million in volume. From my perspective, when institutions get clear guidelines, they start deploying capital into previously overlooked areas. The data suggests micro-cap coins with legitimate use cases see renewed interest during regulatory clarity phases. Banker Coin's positioning in the banking and finance sector makes it worth monitoring as traditional finance players enter the space with more confidence. So there you have it. XRPs, unstoppable ETF inflows, stablecoin adoption in Venezuela, SEC custody clarity, Solana's institutional backing, and what's really holding Bitcoin back. Plus 3 coins I'm personally watching based on these exact developments. Remember, this is my analysis based on available data. Always do your own research. If you found value in this breakdown, smash that like button, subscribe to the Crypto Dam, and drop a comment telling me which story you think matters most. I'll see you in the next one.